Money has shaped human civilization in ways most people rarely notice. It has determined who gains power and who remains powerless. Its evolution mirrors the history of societies themselves. From bartering to coins, the idea of value gradually evolved to meet the needs of growing communities. Simple exchanges became organized systems that allowed trade to flourish. Gold was once the universal standard of wealth, prized for its scarcity and beauty. Societies trusted gold to hold value, and empires fought wars to control it. Silver and other metals served as smaller units of trade, making everyday transactions possible. Together, they formed the foundation of early economies. Ancient civilizations relied on tangible money because trust in physical objects was easier than trust in distant rulers. The material value of coins gave people confidence in trade. The first banks appeared in medieval Europe, offering safe storage and eventually loans. They became pillars of emerging economies and influential players in politics. Lending and interest quickly became tools of control. Debt could empower or enslave depending on who managed it. Debt has existed since humans invented money, shaping societies quietly yet profoundly. It can build empires or trap individuals in cycles of dependence. Credit systems are thousands of years old, connecting merchants and regions through trust and obligation. This network formed the backbone of early commerce. Paper money replaced coins in many countries, making trade simpler but also giving governments more control. Currency became a reflection of trust in authority rather than intrinsic value. Banknotes represented confidence in governments' ability to manage wealth. When trust failed, economies could collapse rapidly. Governments gained influence by controlling money flow, using it as both a reward and a tool of compliance. Currency became a subtle form of social control. Central banks were created to stabilize economies and manage crises. Their decisions impact millions, often in ways invisible to the public. Fractional banking allowed institutions to lend more than they held, effectively creating money from nothing. This fueled growth, but carried hidden risks. Money creation enabled massive economic expansion, but it also tied societies to debt. Few understood how much control banks truly held. Inflation quietly reduced the value of savings over time, acting as an invisible tax. Hyperinflation could destroy entire economies overnight. The gold standard once limited money printing, forcing governments to manage resources carefully. Its removal allowed unlimited fiat currency creation. Fiat money relies entirely on trust in governments. Printing unlimited currency can create wealth for some, while leaving ordinary citizens vulnerable. Credit cards and loans became modern tools of debt, entrapping millions in long-term obligations. Student loans and mortgages shaped the financial lives of generations. Banks profited from every transaction, turning ordinary exchanges into sources of revenue. The system often benefited institutions more than individuals. The 2008 financial crisis revealed deep vulnerabilities in global finance. The collapse of Lehman Brothers shocked the world. Governments rescued banks while citizens faced the consequences of risky practices. Quantitative easing flooded markets with new money. Wealth inequality grew dramatically, giving billionaires unprecedented influence. The stock market often became a tool of power rather than a reflection of reality. Insider trading and manipulation frequently went unpunished, while ordinary people struggled to keep up. Cryptocurrencies emerged as alternatives, promising decentralized control. Bitcoin became a symbol of financial freedom, yet regulation is quickly catching up. Blockchain technology offers transparency, but global adoption remains slow. Digital money dominates modern economies. Bank deposits are mostly numbers on screens rather than tangible cash. Cash usage declines as governments gain more control over transactions. Debt-based systems pressure citizens to borrow and spend continuously. Advertising and consumer culture manipulate choices. Inflation hides in rising costs, slowly reducing purchasing power. Interest rates subtly shape economic activity. Central banks can inflate or deflate economies at will. Sovereign debt often surpasses the total wealth of nations. Credit rating agencies influence global policy, usually favoring the elite. Economic crises often repeat, teaching few lessons. Money serves as a tool of both creation and control. Financial literacy remains low, leaving people vulnerable. Schools rarely teach money management, forcing citizens to learn the hard way. Many remain trapped in lifelong financial dependence. Inflation quietly erodes savings, while wages struggle to keep pace. Real estate frequently outpaces income, making property ownership a challenge. Housing bubbles create temporary wealth illusions, and stock market booms can mask deeper problems. Pension systems face sustainability crises, threatening retirement security. Globalization spreads financial risks across borders. Emerging markets often bear the brunt of economic instability. Trade imbalances affect currency stability, while oil and commodity markets shape geopolitics. Scarce resources create speculative bubbles. Banks often profit in crises, while ordinary citizens bear losses. Bailouts reward poor decisions, not accountability. Quantitative easing favors asset holders, creating inequality. Credit fuels consumption and dependence. Wealth concentration threatens both social and political stability. Cryptocurrencies offer escape, but carry risk. Stablecoins try to mimic fiat stability, yet face challenges. Centralized control resists decentralization and new financial alternatives. Financial power is quietly fought behind screens and boardrooms. Tax policies frequently favor the rich, while offshore accounts hide trillions. Hedge funds manipulate markets subtly. Algorithmic trading dominates exchanges, moving billions in seconds. AI-driven finance shapes the future silently but profoundly. The average person struggles to keep pace with these rapid changes. Understanding money has become a vital survival skill. History repeats when financial lessons are ignored. Governments use money to influence behavior, often ensuring dependency. Financial literacy is the key to breaking these cycles. Knowledge, awareness, and discipline allow alternatives to flourish. True wealth lies in control over your finances. Money should serve humanity, empowering life rather than enslaving it.